Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that companies try to keep hidden. And today, Vivakor Incorporated is spilling some tea, and let me tell you, it is a bit of a brewed mix. So, Vivakor has filed their Form 8K, which is basically a report for big, important events that a company needs to share right away. Think of it as a corporate bulletin board, and this filing is packed with some pretty significant changes that shareholders and anyone interested in this company should know about. The big news here revolves around a deal done on the 25th of November 2025 involving their series of preferred stock. This is where things get interesting. The holders of this series of preferred stock, who basically own a special kind of stock with certain rights, they agreed to give up their claim to a 6% annual dividend. That dividend was supposed to start around April of 2026 and go for a year. So they're saying, okay, we won't take that specific cash payment every year. But what do they get in return? Vivakor is amending the official document that outlines the rights of this series of preferred stock. They're adding voting rights to it. Now, voting rights are huge. It means they get a say in how the company is run, on important matters that come up for shareholders. And get this, James Ballengee, who is the CEO and also on the board of directors for Vivakor, he is agreeing to forgive a little over $569,000 that Vivakor owes him. This is all part of the same deal, the debt satisfaction and preferred stock amendment agreement. So after this agreement, the holders of the series of preferred stock now have about 96.7 million votes. This is a significant chunk, making up roughly 35% of all the votes that can be cast in the company. This shifts the power balance considerably. Remember at their annual meeting in September 2025. A majority of stockholders already approved that the company's board and management could convert preferred stock into common stock, but with a limit of 19.99% if they decided to do so. This new development gives the preferred stock actual voting power, which is a different game altogether. Now, let's move on to what else has been going on. On the 26th of November, just a day after that big agreement, Vivakor issued a whole lot of stock. First, they handed out over 3.6 million shares of their common stock as dividends for the series of preferred stock for July and October of 2025. A good portion of these shares, nearly 1.9 million, went to entities controlled by the CEO James Ballengee. These issuances are considered unregistered, meaning they didn't go through the full registration process with regulators. The company justifies this by saying the recipients are sophisticated investors who know what they're getting into, which is a common exemption under securities law. Then on the very same day, they issued another 1.5 million shares of restricted common stock to a consultant as part of a consulting agreement. Again, this is another unregistered sale, justified by the recipient's sophistication. And as if that wasn't enough, they also handed out 82,500 shares of restricted common stock to an investor. These were like gift shares, sweeteners to seal a deal under a previously announced securities purchase agreement. All these stock issuances, even though they're not registered publicly, are important because they dilute the ownership stake of existing shareholders. This ties directly into the next point, which is a material modification to the rights of security holders. Essentially, by adding voting rights to the series of preferred stock, as we discussed earlier, Vivakor has fundamentally changed what it means to hold that particular type of stock. The company officially filed an amended and restated certificate for its series of preferred stock to make these voting rights official. So, the holders of this preferred stock now have a significant say in company matters, and this change has been formally recorded. This is a really pivotal moment for Vivakor, giving up the dividend payout in exchange for voting rights signals. A strategic shift. The preferred stockholders are clearly prioritizing influence and control over immediate cash returns. This could mean they anticipate significant events coming up where their vote will be crucial, perhaps related to future financing, mergers, or even changes in management. It tells us they believe their ability to steer the company will ultimately be more valuable than the guaranteed dividend income. Now, looking at the financial implications, especially the debt forgiveness, it is interesting. James Ballengee forgiving over $500,000 is a strong signal of confidence, or perhaps a necessary step to consolidate control and move forward. But the fact that this deal was struck alongside the amendment to the preferred stock rights suggests a larger strategy at play, aiming to realign the company's capital structure and governance. While this filing doesn't contain detailed financial statements like a quarterly report, the information provided strongly points to a company undergoing significant governance and capital structure changes. The shift in voting power is the most dominant theme. It indicates that key stakeholders, those holding the series of preferred stock, are making a concerted effort to gain more direct control over the company's direction. This kind of maneuver often precedes major strategic decisions or operational shifts. As for what this all means for Vivakor's future, it is a mixed bag, but definitely more interesting. On one hand, the willingness of preferred stockholders to forgo dividends for voting rights shows a deep belief in the company's potential. At least from their perspective, it suggests they might have plans that require their direct oversight. On the other hand, the issuance of significant amounts of stock, even for valid reasons like dividends and consulting, could dilute existing common stockholders, potentially reducing their ownership percentage and influence. The CEO's role in forgiving debt is also a powerful statement of commitment, or perhaps a necessary personal investment to enable these strategic moves. The most significant takeaway is the rebalancing of power within Vivakor. The preferred stockholders have gained substantial voting clout, essentially becoming a major decision-making force. This isn't just a minor tweak, it is a fundamental change in how the company is governed. This could lead to more aggressive strategies, quicker decision-making, or perhaps a more focused approach on specific growth initiatives that the new voting bloc champions. Risks are definitely present. The potential for shareholder dilution is a concern for common stockholders. Also, any major strategic decisions driven by this new voting majority could carry significant execution risk. If these plans don't pan out, the absence of dividends and the expanded voting power might not translate into the desired long-term value. In conclusion, Vivakor is at a crossroads, clearly implementing a strategy to consolidate control and potentially accelerate its growth plans through its series of preferred stockholders. Whether this bold move will pay off remains to be seen, but it certainly makes Vivakor a company to watch closely. Alright, that is our breakdown of Vivakor's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this shift in voting power is a good thing or a bad thing? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate filings just like this. And don't forget to check out our Discord community linked in the description, where we discuss these things further. Thanks for watching, and we'll see you next time on Corporate Decoder.